Good afternoon, guys. Welcome back. Week 44 now. Slowly another month and it'll be a year. But this week, some more execution from last Friday on the gold. Then we'll go into how I put these two together this week. Some self-talk and execution performance and how I went through last week, which, to be honest, was pretty disappointing after how we finished. Last month was, I think, two good weeks I had and one or two bad weeks, which were followed by this week currently. So I'll go through January's review as well, and then what I felt like from last week, what I need to improve on, and throughout the whole month, what happened back into the year. Now back into the full flow of things. So I'll talk about this trade. I've done something else I've started to do and change my the way I've been journaling things. This was the first one, so I apologise if it's messy and you can't read the writing, but I've started to draw on my charts. It's something else I've started to do. So on my laptop, lucky enough it's touchscreen, so I can then now draw on this. I find that doing that is much more of a benefit, because when you can use much more, to me, colour, you can draw on, the profiles you can create. It's easier to, when you're drawing with your hand, it remembers in your brain much more. So like I say, this was the first one I did, so it's not got all the colours, etc. that I've started to use. But from a bigger picture perspective, it's much easier to draw, it's quicker, and I feel like you can do a lot more to it. So it's a different way of just seeing what, different practices you can go through, just to change things up and see if you find a benefit. If it doesn't benefit me, then you go back to a different way of doing it. But just looking at this, just from a profile perspective, what I do straight away when I come in the morning, see what's going on. So we had gold. So this is the whole week of gold. So we don't really have much going on. This is where I got caught out quite a lot. You're trying to sell and buy things. You're having quite a lot of balanced areas. We had pretty much value for the week was stuck inside a pointish range. So as we come in, I was looking for this. As soon as we failed to go lower, you had some single prints down here. So you had this low volume point down here. So as soon as we held here, this, what I was slightly concerned on, looking towards these highs, is that's the open on this day that we've tested up, got quite a poor high, and then we've closed quite low. And to me, it's if you put these two profiles together, you've got double distribution type. So then overnight we were filled out this little zone, I suppose. You closed outside of the value. This is quite tight that we've been in all week. So then you started to grind out from that EU session, grinded out. So what I was thinking, as long as we hold in this value area, then I'm looking to play the break of these two highs and just target it the extension through 30 ticks. As it's been a bit choppy as well throughout there, you're chopping your way through it, trending your way through. So a 30 tick, target. What also we had come at this point was the US. They said their planes weren't flying to China anymore, so that created a bit of a risk off flow, which I show in the execution. So I was looking at just a couple of areas to look for a little break and a bit of continuation, losing the fundamental way of risk off. So they're the things I was looking at, trying to put the whole bigger picture together and seeing what we could see, combining profiles, etc. Again, it is very messy, but I'll explain. I obviously can read this because it's my own handwriting, but I know you guys might not be able to read it as well. So this is just a 5-minute time frame. So we ended up in this little box, got a triple high, and you so you come out of this. I think this might just be a 1 minute chart. yeah, I think this is the 1 minute chart. So as we're sort of, I think the area, if you look, when I went back and looked at it, the area to sort of get in was sort of down here, sort of the absorption of, you know, buyers stepping in. You sort of, you know, you've had this sort of grind move way up. You know, again, you're trying to find areas to get long. You don't, as you'll see, this little candle, 1 minute candle here, squeezes me quite a bit. Where I had basically all the size on, and then it squeezed me, and then you have to sort of reposition yourself. But you don't want to start to be buying when it's a bit sideways. You don't want to start buying the tops. So you have to take your time in judging the price action between all sort of 3 different highs, and then you want to see something quite different, sort of on the 3rd or the 4th time. And then eventually you get the big pop, and then small little, and then you sort of grind away higher. And that was a sort of chunk of the move you want to be taking, is that quick, simple movement, which is eventually what we got. I eventually tried to get long in here, and I was probably a bit too aggressive, and plus you get the delta goes, so everything lines up, and eventually you sort of get the double top pattern, and as soon as you come back through, you sort of had it back towards the downside in the end. So I'll just show you before I get onto the execution as well. This was the area I was talking about just then. You sort of get in this white box, you get it, you know, good absorption area. Not much selling is coming back through, so you only get 44 is the delta in each of these 10 tick rotations that I've got, and a bit more selling in the other. So you haven't really got that, you know, 500. If that 500 is in these, you know, it's much more higher conviction. You just want to be watching the price action in these zones and seeing if the selling can really take it lower or not. This one as well, you get a lot of buyers buying into the high of the 2nd time. Sorry, that 3rd time you test up. Much better delta, much more high volume, and then you get the squeeze, and then eventually you get something slightly different in this area, which is, I would be slightly concerned, because there's a bit more selling going on here, and eventually the delta does push it all the way through. You're not getting the delta in here, isn't mega aggressive. You know, you get minus 200. You want to see a bit more darkness, and you want to see these change sort of into sort of 300s, etc. You just want to see something different on that 3rd, the 4th time that you're coming through. So once we pop here, we got, as you can see, loads of stops got hit, and then you get another absorption. So you hold that low volume point, which I'll be able to show you in just a moment. Much higher delta in here. Again, it does that light squeeze. I think I got out of everything by, I'm not sure, in this zone, I think. So you get that little bit of absorption again. Again, you want to, you know, you sort of have the trust of this area in here that the low volume is gonna come effective, and then you get the explosion. Again, you get that sort of trendy move higher, slow sort of grind, does that squeeze again, and you're just looking for the sort of continuation. I mean, sometimes these will, like I've said before, these will catch you out, but then you want to see it to come back, and you want to see it test this zone again and see if the selling's still here, as we got in here. You want the buyers to push those sellers out of the way and then continue, which I thought we would continue much more, but we didn't. We did get to my target in the end, but I'll drag the. So I will play this. So before this happened, I'll probably play it on half the speed to begin with, just because. So just as I wanted to be long anyway, that was the whole idea throughout the day, and this sort of helps sort of the market when this US thing come out about the planes, etc. This is what I'm looking for now. So you still have risk on, you know, completely across the board. So you have, you know, you had SPOOs at S&Ps at the lows, oils, you know, 10 ticks off its low. I do start to add a bit more as I go inside. I do start to add on more. So, but then then I start to look across the board. So you've got I'll pause it, and then just explain so what markets are what. So you got the yen over here, silver, copper doesn't seem to take too much interest in this point. And then you got Bund, S&P, gold, and oil. So all I'm looking for is these markets to keep going up in this direction to keep you with that extra high conviction and other things to lean on. Technically, copper should be going down. Silver and gold should hopefully be following each other, and with the yen also. So that is what I'm looking for across the whole sort of board, and trying to, when I go offside, trying to keep myself in. There are parts where I was watching, when I was watching it back, is that is not the best execution by looking at things that are trading in prices, etc. So as we're going high, all I'm trying to think of is making sure all these markets are still in the flow, even when it squeezes you a little bit. As long as all markets are, speed it up. As long as the markets are all in sync with each other across the board, then I'm fine. Bund is nearly at the high, so what I'm looking at is mainly silver and the yen to go. As soon as we start to go, I'm willing to buy into this high. That is the previous high that we were looking to take, so I'm willing to just keep buying into this high and can be quite aggressive into that. And when you want to see the size keep trading up, at times I feel like what I was doing is that I'm not seeing much size, so I end up just buying the high. So at one point, so when it trades 41, I thought that was quite good. The problem is it didn't take it bid, which was the problem, and you still got S&P coming off. So you got, then look across the board if they're all sort of at their extremes, and then up to 8, as we did trade 100 lots into 96, so I hit that again. Good size to clip up, so then you get that even more high conviction. You want to see everything else still, you still got both markets at their highs. And then eventually what you do is you get that 1 sort of minute squeeze that I highlighted. And then I try and literally, that was the low in the end. So I went a tick and a half offside. So then I sort of had to then reposition. And then what I was thinking is that now I've had 8 lots on, I need to, when this goes properly, you want to have, the same amount of size on. In line, everything is still in the same place. They're still holding the highs. And then again, I'm starting to buy them. So I'm up to 6 now. And then you had this bit of size. So you had 190, 90 in a row. As soon as that gets taken, to me, it should completely be on. If they get hit quite quickly, this whole trade, you should be correct, you should be right. Again, I'll get up to 6 and I scratch 2. As soon as this area is taken, all the other markets should then keep this flow going. And again, I always kept buying into the high. You want to be watching what's trading in. You want to see size. You sort of got someone willing to sell. This person here, willing to sell, and until someone comes, and eventually we sort of hit. So you get a bit of a bid. Now you want to see this 100 lot go. As soon as that goes, you want to be holding all the way through these 07s. So you still got S&P, everything else, and you get that big giant blip. So then you created this little low volume point. S&P still at the lows. Bund's slowly getting towards the highs. And oil hasn't even tried to take its low as of yet. Copper's slowly coming off. So what I was happy with is that there's your low volume. I did put a bid sort of in there, so gone up from 6. Then eventually got into sort of 7. So we did a couple of minutes. So what we did was a couple of minutes just sitting in between this area. Not press play. So at a couple of minutes sitting in this zone, you're still looking at oils close to the low. SPU has bounced a little bit, which is the only sort of a little bit of a worry. You've still got yen, silver at highs, and the bund is slowly getting up to the highs. As soon as you see that get taken as well, you want everything is still not working. There we go. It's not playing. What's going on? There we go. So as soon as this happens, I started to scale out a bit. I always remember things before is that when this happens, you get the top of the top of this bit of high volume can sometimes catch you out. So I started to scale out a little bit before. So now I've gone down to 5, and this is where, like you see in so when you do the elite trader, very sort of similar. Once you've got your size on, I'm willing then to just scale out towards the target. Now you've taken a nice chunk of the move, try and run the rest of the size and just scale out. From what I was doing quite poorly is that I keep messing around with when to get out and worrying about a tick here and there. So then you still get the size. So what wasn't frustrating me is that what I should be doing now, stop worrying about the high volatility which was going on, and just concentrating on where all the other markets are. Now SPU's at its lows. Now you are right, 100%. Again, I start messing around with how to get out because you're worried about every tick, and then you start. So now I've got 2 left. What I was trying to do is still try and run, but then I sort of panicked in the end and got out of everything after, to be honest, which was not an ideal week. But then you still got all the flows really start to kick in. The yen's gone miles, silver's completely gone up, bund's now at its high. Possibly you could think the bund that could be at the end of its sort of move, which eventually I do try and hold this a bit longer and just eventually I get out. But it was just the way I wanted to talk about how I managed to put the size back on. No, what I wanted to talk about is that the fact that I got squeezed in that part before. So the part before is before we went up, before we did that blip. So didn't do another rotation. So the time I was buying into this area, it did get a little bit of a squeeze, and then eventually we did the pop. So you want to have that size back on in that area. I didn't want to then have only like say 2 or 3 on, because that would really have annoyed me. And then I know 100% what I would have been doing is I would have been buying some more here, and then I'll be just smashing the high because I haven't got the size on in the area I should have been getting in. So that was one factor. The fact that I put the size back on, then the fact that I held it well, I had high conviction. Just the other error was getting out, probably too aggressively in the end by not just letting it flicker out, and then trying to run all the way to the target. I think I nearly got there. I think I ended up getting it out sort of in that zone and just left the one to run. So overall the whole trade was a success, but mainly it was I didn't like the way I executed, because you get the panic when the move starts to really go. You sort of had that panic mode on where really it started to pick up a bit more high volume, all of those sorts of things. That's what I just wanted to show you about the execution. I probably was buying the highs probably too aggressively, not looking for a bit of like some bigger clips to going through, especially when it hit that 100 on, and then it didn't take it. All these small little things that I try and watch out for after when I've watched it, and what's going on when I'm trying to get in trades or be aggressive, is just you want to see these small little key points in how, just things that light up to you when the price action's slightly different. Just see what goes on, see what makes, so especially when it blipped through the the high, it just someone comes in and just wants to smack those. So those 390 lots that were sitting there, someone just wants to hit those. Then you get a bunch of stops that maybe people might be front running that bit of size, or those small little areas to look at. So some of the execution I want to talk about this week was there wasn't really too much flow, and I mean that happened when there was a lot of flow, and that's the only trade that I really actually did well on. So when there was a bit of flow into the market, I did okay. When there wasn't, then I didn't do very well. I was overtraded quite a lot, hit comments, and just kept adding up tiny losses throughout the week. And when you start when I up my size, so you click from clipping 1s to 2s, your day can be over, in half the time. I thought the execution that I did on Friday was probably some of the better stuff that I've done. Got my size on before the big move happened, which is what you want to be on. Like I was saying, you wanted to have it, like I was saying, if it gets the blip and then it pulls back, I know I buy here and then I know I start buying in here. The fact is that I had everything on, pretty much everything on in that area before we went. Not, full size. Now I've increased it to 10, but I didn't want to start buying the high so much and then getting giantly squeezed and then taking a bigger hit, as I wasn't having a great day at that point anyway. Some poor management on my days throughout each day, last week specifically, and not taking small winners. I always seem to notice I always have much bigger winners. I need to manage to help to build days, so a bit more tighter execution through in, say, the mornings, sort of taking 10 ticks here and there, maybe more of a scalping sort of mindset in the mornings, and seeing how that sort of takes fading things. These are the small things I'm trying to work on now after last week, when trying to build like a day, and instead of then just losing and then having the sort of defensive mindset I was talking about. Some pretty poor self-talk again. I sort of went on a bit of a bad run last week. It was all like 5-6 days in a row of just losses, where I was struggling. The market was quiet, so I don't do well in. So that was probably the time to then sort of fade all these like comments you were getting, things that didn't mean much. And technically I didn't. Technically I thought I looked like I knew what I was talking about, but nothing really happened in that perspective. It was not very positive at times. Again, sort of that thing we talk about quite a lot. When you're up in your size, you're taking bigger hits here and there. Sort of plays on your mind a bit. And that seems to be a pattern that I've noticed in things when I start to lose a bit. I start to play a bit defensive. I need to just work on how to, recruit myself a bit quicker and change things around. This was January's performance in the end. So just over the whole month, there's some other bits. So that starts at 0. I do have a couple of really good days, and I was talking about when I reached this peak, and then I pretty much had a small sort of down towards the end of the month. So pretty much flat overall. Where I was clearly going wrong, which I noticed, which was in the mornings, and then for some reason the afternoon, and sort of in the evening. Evening, doing okay, sort of nearly midday I was doing okay. And then the evening I was doing much better. That's when we had the Fed last week. And again, it shows that it was really quiet for me in the afternoons, and I was probably getting frustrated. This here was UK PMIs, which I think I said was not the best thing in the world. So Monday, Tuesdays, I started the week okay, quite a few times. Wednesdays and Wednesdays and Thursdays, shall we say, I obviously tailed off. So it's all these different types of practices I'm trying to do to, reduce these if we have them, or we just have small. What I'm trying to do is have these sort of days there. So you have build on these smaller days where they add up nicely over the month, instead of having these and then these all the time. This is something that I keep noticing I do. Big P&L swings where I'm sort of swinging around a bit, like I'm giving up quite a lot. I'm giving a lot back there in those sort of, 5 days when it took me 2 to get there. I'm slowly then off on sort of a bad run. So sort of the two markets that, my core markets, oil and gold last month. Gold I did well on, oil not so good, small down, that's fine, not the end of the world. The Bund, which is what I traded on, ECB and the PMIs, the German, the French and all of that. And then cable, this was all in one, traded on the UK PMIs. So risk events wise, we go into those, it was basically the same size as how I trade the cash breaks. So what I lost in risk events is what I made overall. So where I'm going wrong, something to look at is that maybe staying out these risk events more, or just letting them create flow. Don't just hit these numbers, but just trade the flow that they give you after them, like non-farm today. Mainly what I'm looking for is don't trade the number and just look for the flow that you get in this afternoon, looking at other markets where you think the flow could come and take it. It's like we had FOM when we had the Fed last week. You sort of had, it was a non-event, but it might create some flow when you get that small gold breakout that we got, which is really slow, but it creates that, and you sort of had that risk off in it, with it having the spook come off as well. So all those little small things where to pay attention to, which haven't done enough. That's why I lose money in the risk events, is that just let them do its bit instead of paying the extremes all the time. Especially something to work on. Also to notice that I trade a lot in the afternoon, and I clearly overtrade in that time. 40 trades, so there's pretty much, I'd take 10 trades every Wednesday. At that time, yeah, so quite a lot of trades overall. Not 10 every Wednesday. So it's the afternoons, I haven't done well. That was just one error, so I can take that, sort of as more of a positive in a way, that it was something I would have done again tomorrow if it happened. So what I've done here, these two are split. So this is a 5 minute and this is the 15. So it's these two here. So what I wanted to look at is where from a time perspective basis, is where I was, doing bad and doing good. So as we know, I do well from holding things from sort of 15 minutes onwards, and I do bad from 10 to 5 minutes. And this was over the month, so we had too many losses with so like I've been saying, we chop this back loads, where it's something I'm trying to work on, is reduce the amount of losses I take and take in the the bigger winners, etc. Then to be basically flat on the month, if I took 30 of them away, then we'd see a huge difference. Which if I stop hitting, say, really bad comments and things that come out which aren't game changing, then you take off half of those, or if not most of them, it's a big P&L swing difference. So again, that's where I want to try and be working on. So where I was doing the difference between good and bad is that the openings, which I'm clearly struggling on in the oil, and where I traded quite a bit again, but these holding periods, if you look at it, I saw across the board, we've just got a big giant spike where I'm over trading and taking a lot of small losses in a quick time frame. And again, it sort of happens with the P&L as well. Taking a lot of losses throughout the week on that front. So you reduce that and stop trading these opens and try and look to understand where I'm going wrong on these opens in both markets. Again, your main markets, which is what I trade, the oil and gold, I don't do very well on. Coming into this area, that's okay. You're not make it down. A bit of a tough month on the oil, that's fine. But at least you're one other main market you're doing well on. And then, over the longer period, sorry, jumping about, but over the longer period of holding trades, not losing much P&L, but again, you're making much more at certain times in the day. So again, I traded a little bit there, 5 trades there over their 6 o'clock period over the whole month, you did well on. Again, you trade less. So there's 3 trades over the whole month in holding for 15 minutes or longer, 15 minutes or longer, you're doing much better on. So it's all these small little, things that I'm trying to look at just to see where I'm going wrong. And then we can sort of work on this 2 o'clock time. Maybe trade less, don't trade in that time, or it's the volatility change that for some reason I struggle from the morning till now. Again, sort of the percentage of 16 to 28 is much better. Don't mind that because, I've done well out of losing 28 trades and holding the long one because you're making much more. So this is the 5 minute, obviously that's the 15 on what trade types I've done. So on the 5 minute, when you're looking for basically where my edge I would say is at is these. I would say the comments have been slightly an edge recently. The tiny losses, which is exactly what you want. And you want to be seeing where you're holding a bit longer, these comments, etc. You want to see where your edge is at, that you're up. You don't want to see the holding period and this is down here. Small loss, that's fine. You're not seeing huge amount of losses. This might be a poor entry. These defaults are the same of the reaction trades we've got here. And obviously I wasn't doing, so these, we look on a 5 minute basis, didn't do well on risk events because they're just quick and you're in and out. And then you've got the default sort of stuff that I was, just those really poor trades that you hit with no conviction or anything like that because you're frustrated and possibly losing money, or you're up on the day and you're sort of just punting, which is sometimes what you do when you lose the conviction phase. But that's overall where you can look at the month, etc., and how I will go through it at the end. On every week I'll do it exactly the same. Click on the areas where I'm losing and making, see what the crack is on that. Last bit, improvement areas, just working on how to manage my days better, as I've said. Judgment on timing of using sessions, so when the volatility will change, so 120 for gold, oil at 2 o'clock and the 2:30 open, the US market. How to approach trades a bit better on maybe how to be passive aggressive, and the longer time frame basis of how long you want to hold these trades. Just trying a bit more efficient, protecting the P&L much better on the days. You can really build your week on by having say $300, $400 dollar days, even 200. It adds up. It's better that than having like small losses, trying to just take these little fading things, scalping things, having a bit of higher confidence about that in that sort of perspective, accepting the small winners that add up. You have 4 10-tick winners on a one lot, it's, add your day up. You don't want to then be giving that away. You can have that was something I was saying, set your targets on, how much you were willing to lose. If you want to go back to 0 from 400, then stop trading, because then you're not going to go down. You want to just have that consistency and stability. Keep working on the technicals, that's why I've tried that other practice of drawing on the charts. Such a different way of noticing things. You can change the colours much quicker than just clicking on the mouse, typing, etc. And plus, I write much less than, as you've seen, I write quite a lot on the charts because you can fit more in. So if you write more, if you write less with your handwriting because it's bigger, just that you can put the key points down as well, and it's much more effective on just, instead of reading, it's 5 lines, it's better to have a few words. And just trying to understand when to use advantage and leverage up at the right times. And you don't have to, not every trade has to be full size, except the smaller winners. And there's no need to have a hero trade every single trade and every day when you want to be full size. So that's how sort of I've been doing over the last month. Not the best month to start the year, but it's definitely getting back in the flow of things. Understanding clearly where I've been going wrong. We had 2 quiet weeks and 2 more volatile weeks where I made money, and the other 2 where I lost. So it's understanding the difference of when the markets have changed from more volatile extended ranges to those more compressed areas. But that would be it from me this week. Normal information if you want to get in touch, info@axiafutures.com.